Well, howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Thursday, August the 27th, 2015. And I am very grateful, and I have the distinct honor of speaking with Mr. John Rubino from dollarcollapse.com. How you doing today, John?
I'm doing all right, Roy. Good to talk to you again.
Same here, and it was kind of short notice, but I'm glad that you accepted my call, and we'll just jump right in and make something happen. How about that?
That sounds great.
That over the past 2 weeks, China has devalued the renminbi, yuan, 4 different times. They've revalued it one time. Very small. Everything's been small moves. During that time, they've also made 2 different official gold holding announcements. During that time, they've also dumped $100 billion worth of treasuries and made it very clear that they're not done with that.
Okay.
And all of this, while the 10-year, I believe the 10-year has been moving upward since about July, somewhere around there. I may be a little bit off, maybe June, but it's been moving in an upward trend. So they're moving their treasuries out of their holdings and onto the market into strength. And I just wanted to get your take on that, on all of
Okay.
that.
The big background picture here is that when you borrow too much money, your life starts to spin out of control, whether you're an individual or a country. And since the 2008-2009 crisis, the whole world has instead of learning the correct lesson and getting our financial houses in order, we all borrowed a lot more money. And so you can deal with the consequences of having too much money in various ways to delay the inevitable reckoning, but eventually it comes. And for China, it has kind of come lately. You know, they had basically this debt binge and infrastructure build out that have been epic. No country has ever done what these guys did as far as borrow that much money and build that many roads and bridges and new cities as they have done in the last few years. And their stock market went through the roof, and the economy grew because of all this money being thrown at all the construction going on. And that was eventually destabilizing in China. And so that's where China is right now. Their stock market bubble is deflating, and the economy is slowing way down. No matter what they say, it's possible that they're not even growing right now, just because that's how credit bubbles work. When they burst, you shrink. And so they've been trying all kinds of different things to avoid having to confront the inevitable consequences of their credit bubble. And as you said, they've been still buying gold, but they've been selling treasuries, and they've been using the proceeds from those sales to prop up their stock market. And that's been causing disturbances around the world and all the other financial markets. Because China's big now. They were at their peak buying 50% of a lot of the world's major raw materials, which pushed up the prices. When they stopped, the prices of those things plunged. And overseas Chinese who are moving money overseas have been big buyers of other assets like U.S. equities and U.S. bonds and real estate and trophy markets around the world. So when China sneezes, the rest of the world catches a cold now. And so that's what's happening now. As far as U.S. interest rates go, they were kind of trending up. And in part, that's because there's a perception that the U.S. economy was strengthening and the Fed was going to raise interest rates. And so it made long-term treasury bonds less interesting as an investment than they may have been before. But then when all this turmoil started, U.S. interest rates plunged again. The 10-year treasury dropped back below 2%. And that's an extremely low yield. It's the lowest it's been since May or so of this year. And it's pretty close to as low as it's ever been. I mean, it's been somewhat lower than that, but not much in American history. So the volatility that we're seeing in all these different markets is exactly what you would expect when you've got at least one big entity out there flailing around and trying to figure out what to do with the credit bubble and failing. So in the last 6 months or so, we've seen Greece blow up, and we saw Russia have a mini financial crisis, and now we've got China in the throes of what could be a bigger financial crisis. And at the same time, the U.S. stock market was at record levels, priced for perfection. So, any kind of perturbation out there would have sent our stock market into, kind of a 2008-ish series of ups and downs. What we're seeing now is an awful lot like what happened back then, just before the Great Recession hit, when you saw the markets spike and then crash and then spike and then crash before they finally crashed. Yep. So, there's no way to know if this is it again, if this is the big one. But when it comes, it'll feel like this. This week is sort of a little taste of what's coming when we finally do have our financial crisis, when the consequences of all the debt we've taken on finally do hit home. And there's no way to know if this is it, but this is definitely what it'll feel like.
This is my thesis, that China was really put off by the IMF and not being allowed into the SDR. And they have kind of tweaked some of the gears in order to create some problems. And with the fact that the United States federal government is the largest debtor nation in the history of the world, and they are our creditor. They are our number one creditor. And they have us. They own us, period. And with all of the saber rattling and all of the smack talk that's been coming out of the Obama administration, and then the snubbing by the IMF, do you think that plays any part in it at all as far as what's been happening?
Well, it could, yeah. I think China's financial crisis is a completely separate event from their attempts to get the yuan into the special drawing rights basket at the IMF. But it's completely possible that some of their behavior, some of the choices that they make in dealing with their financial crisis is colored by their frustration at, being basically the world's biggest trading country.
Yep.
And having a currency that isn't yet accepted as quote unquote legitimate, as compared to the yen and the euro and the dollar. And, you can see that China would be a little frustrated by that, because the yuan, based on the size of China and the amount of business it does with the rest of the world, the yuan should be a minor reserve currency and a generally accepted trading currency by now.
Well, but it actually is, because they have all of these swap facilities that are being conducted through some of the largest economies in the world. I mean, they have, direct swap relations with Australia and Japan and France, and just to name some of the bigger ones. I mean, these are massive economies that they are doing, and not to mention Russia. I mean, it's yuan and francs, it's yuan and Australian dollars, it's yuan and whatever yen. I mean, they're not.
Yeah, I mean, they are cutting trade deals and currency swap deals with lots of other countries, but still, the amount of trade that actually takes place in yuan is minuscule compared to the relative size of the Chinese economy.
Okay.
It's the number 2 economy in the world, and yeah. Their currency isn't anything like a close second to the dollar in terms of international trade. So you can see that they have this trajectory where they're here and they want to be over here at some point.
Okay.
And so anything that stops what they see as their progress towards their legitimate place in the world would be frustrating. I get that. Yes. And that is definitely a weapon that they have. They own all these treasury bonds. And really, they had to raise cash somehow, right? Because they had to, well, in their own minds, they had to throw a lot of money at their stock market to keep it from tanking. And so they have a choice of things to sell, unless they're sitting on just, several $100 billion worth of cash, which I don't know what they have in their accounts. But assuming they don't have all that cash just sitting there, then it makes sense that they would sell their most liquid assets in order to raise cash. So, you could look at it that way too, that that's just the most appreciated thing that they own, long-term treasury bonds. And so that if they do need cash, that's where they would look. So I don't know how much we can read into the different pieces of this story, because there are a lot of moving pieces right now. A lot
Lots.
of, and so it's hard to say, especially since China is still run by a political party, a lifetime in power communist political party. So it's not clear how much they understand about what they're doing. They've got some guys at their central bank that have some trading experience in the West, and they probably get what's going on. But it's not clear that the guys issuing the orders from the top understand markets as well as we might hope. So it could just be that they're trying all these different things because they've heard that all these different things should be tried, and they don't really know how the pieces fit together or anything. So I really don't know. China's kind of opaque. It's hard to know exactly why they're doing what they're doing, or if they're even doing what they say they're doing. Their GDP numbers are generally accepted to be kind of goal seeking. They release the number that they think will get the best result from the markets rather than the actual number, assuming they even calculate a real number. How do you calculate economic statistics for a developing country of 1.2 billion people?
Well, how
Where
do
do you
you?
get those numbers?
Well, that they probably were trained by the Bureau of Labor Statistics here in the states.
Ah, so they estimate, yeah.
They're fantasy land numbers that they put out.
Yeah, that's true. I'm belittling China's leadership, but glass houses and all that.
Yes, exactly.
Yeah,
It's just like, wait a minute, you're describing the United States.
yeah, yeah.
I mean, we
It's so true.
all of
Yeah,
our numbers are fudged. I mean, as you well know, I mean the unemployment numbers, the GDP, all of that is all pure fantasy. I mean, it's and so whether we're talking about the United States or China, I mean, whose numbers can we believe? Well, none of them. I mean,
yeah,
John.
and it's not clear the guys in charge here really understand markets either, based on their actions, because they're doing everything that you could possibly do to sabotage the main functions of the financial markets, which are price discovery, right? The
Yes.
markets send you signals about what's going on in the real world. And then if you're an entrepreneur or a consumer, that signal kind of tells you what to do. But you paralyze that signaling mechanism, and markets don't really do anything. They just kind of flail around, which is what we've got right now.
Yes, and that's kind of the scary part. I mean, and that's really why I wanted to talk to you because, I mean, you are so plugged in to what's going on with our economy and with the financials, and I just thought that it would be important to get to bring your analysis to the table so that we could get a better understanding of what's going on. And one last question, John, then I'll let you get back to your afternoon.
Sure.
As far as China's gold, do you see that? Because this is part of my thesis as well, is that I believe that they have a lot more gold than they've announced, and I mean a lot more gold. There's probably another zero attached to the 1,200 tons or 1,100 tons that they've announced. I think there's probably closer to 15,000 tons. That's just my belief, and that's based on some of the work that Alistair McLeod has done. And do you think that it's possible that China has reached a point to where they no longer need any of the Western world? They have lots of infrastructure. They have a lot of financial infrastructure that has been deployed, and they have a lot more that is coming. And with the fact that they have gold, we know that they have a lot of gold, and we know that they have or the general belief is that they have a lot more than what they're letting on to. Do you think that am I just way out in the weeds here, or do you think that there's anything to that?
Well, I think it looks like they're accumulating a lot more gold than their official reserves indicate. If you look at the Shanghai Precious Metals Exchange
Yep.
importation numbers, they're huge. And then China has a big gold mining sector that doesn't export anything. The gold
Right.
stays in the country somewhere. So, yeah, you look at those numbers, and then the implication is that somebody in China is accumulating a lot of gold.
A lot.
Yeah, yeah. But that doesn't mean they're independent of the rest of the world by any means. They're still an export-driven economy. You take the American consumer out of the equation, and pretty much everybody collapses around the world. And so, China still needs to be part of the global economy. They wouldn't be a happy place if we were in depression here, because they need us to buy their stuff. And a lot of the infrastructure build out that they've done was malinvestment. It turned out to be politically motivated because some guy in some regional government entity decided he wanted to build his own little empire out there and borrowed $500 billion and threw it at a new airport and roads. And there's no planes landing at the airport now, and the roads are empty. And that's true of a lot of places in China. So a lot of the money that they spent that generated GDP in the short run was misspent, and now is in some way going to have to be reversed out. In other words, they have to take a loss commensurate with the GDP that they reported in the moment, if that ghost city doesn't generate any cash flow in the future. So they're looking at some big losses out there, kind of in the same way that Germany is looking at a lot of losses that will reverse out a lot of their trade surplus, because their trade surpluses came from lending money to Greece and Spain and Portugal to buy their stuff. China's kind of in the same boat with a slightly different process, where they borrowed a lot of money, spent it on unwise things, looked good while they were spending it, and now they've got some big problems. So to the extent that they bought a lot of gold, that was very smart. And that cushions them to an extent from the effects of their bad decisions. And also to the extent that they accumulated a lot of treasury bonds. Those things have been excellent investments against all odds for the last 5 years or so, And so they've made a lot of money on top of their trade surplus by investing their trade surplus in things that turned out to be good investments. So in that sense, they've done well. And on the infrastructure build out side, they didn't do quite as well. And it's all going to have to shake out. And the numbers won't be clear probably for a decade, because they don't tell us anything in the short run that we can actually believe. And so it's going to take a long time for reality to percolate up. But in the meantime, it's really hard to say whether on balance they did a great job or a crappy job of managing their economy for the last decade. So I don't know. If they did a great job, they're just about the only country that did. And it's much more likely that they're kind of in the same boat as Japan and the US and Europe, powerful places that were able to borrow lots of money and did borrow lots of money and did unwise things with it, and now have a reckoning somewhere out there in the future. So I think the global economy has a mess on its hands. And the epicenter of the mess is still to be decided, but it's looking like China right now, but it looked like the Eurozone 6 months ago. And it might look like the US next year. There's no way to know.
Well, do you think that we are somehow in the U.S.? You said that it may be the U.S. 6 months from now, or sometime in 2016. I mean, do you think that some of what we have witnessed over the past 2 weeks here in the equities markets, is that what we should expect going forward? And do you think that you'd alluded to that same kind of market action prior to the 2008 crash, or
Yeah,
do
well,
you think that's on is that on the horizon at this point?
back in 2008, there was an idea that we would decouple from the rest of the world, that we were kind of immune to a crisis elsewhere, and that turned out not to be true. Everybody kind of fell together. And there's the same theory this time around that when there's trouble in the world, we're going to look relatively good. So capital is going to flow in from everywhere, and that the U.S. stock market is actually going to go up during a global crisis. And it didn't happen in 2008 that way. But the rest of the world is in much, much worse shape now than it was back then. So you can't discount the possibility that we actually benefit from safe haven capital flows to the extent that it cushions some of the crisis that is inevitably going to come when all this debt has to be dealt with one way or another. So I really don't know, what it means for us in the next couple of years. It seems completely reasonable that we could tank along with the rest of the world when enough problems happen all at once to overwhelm the world's central banks. Or we could be this kind of island of stability just because so many Chinese are tossing money at us, and so many people are bailing out of an unraveling Eurozone with nowhere else to go except U.S. Treasury bonds or U.S. equities or whatever. So that's a hard one to call. You can't just say, well, this is exactly like that, and it's going to play out exactly like this previous historical event. This does feel an awful lot like 2008, but we have to keep in mind that history doesn't repeat perfectly every time. And so even though it feels like 2008 going into a crisis, the resolution of it might be different this time.
Well, I hope that the resolution is different this time. I really do. We've been speaking with John Rubino from dollarcollapse.com. And John, why don't you tell them a little bit about how they can get in touch with you?
Yeah, well, the easiest way is go to dollarcollapse.com. I run that site as a blog slash news aggregation site, and it's updated daily. And then my most recent book is The Money Bubble, which was co-written with Gold Money's James Turk and covers a lot of the stuff we talked about. So it's also available on dollarcollapse.com or through Amazon.
That sounds great, and I certainly appreciate it. And in the future, when I want to speak with you, I'll try to give you a little bit more of a heads up than say an hour.
Well, you call anytime. We'll work something out.
Well, I certainly appreciate it, John, and you have a wonderful afternoon.
Thanks. You too. Take care.
All right.